Very good evening to all of you for the 15th Mission Smile webinar today. I am Ankit Kanodia from SmartSync Services. And as always, we'll cover one business today. But before we go to the business part, there is an announcement which I want to make. There are a few changes we are making in our Mission Smile offering and trying to add more value to our Mission Smile members. And we are also shifting to a learning platform so that all our content are easily visible and available for all our Mission Smile members. Also, what we have decided and managed to do is we will get at least 2 new guests every month apart from our usual monthly webinar. So like last Saturday of every month is fixed for us. Apart from that, we will have 2 more guests coming in. One would be in the form of investing Carva. Episode 1 was there for Professor Sanjay Bakshi. For episode 2, we have got a confirmation from Vishal Khandelwal of Safal Niveshak. Similarly, we'll also have guest webinar. Like we had guest webinar for in the form of Nandan Madiwala, who presented wonderfully on Intellect Design Arena. We will have Jatin Khemani coming. Jatin Khemani of Stalwart Advisors. He's coming on next month. The only thing we would request you all to consider is that these guests have time constraints. So there may be a case that some of these webinars get bundled up in 1 week or 10 days. But our webinar will always be in the last Saturday of the month. That will be confirmed. But these guests, we can't give them a hard time that you have to present this week only. So like Professor Bakshi agreed for 20th, and then so I've been following Professor Bakshi for 1 year now. And even in case of Nandan, I was following him up for the last 3 months. So coincidentally, Bakshi sir gave me 20th day ka time, and then Nandan also agreed for only 25th. And we have this 28th का webinar today. So ठीक है, एक बार हो गया ऐसा कि in a span of 1 week you are having 3 webinars. But generally we'll try to space it out. So like in the month of June we have the first webinar by Jatin Khemani on 4th, then Vishal in the Investing Carva on 18th, and ours will be at the last Saturday of the month of June. So you will have enough time in between. And another thing which we'll do is we are soon going to remove all our content from YouTube, which is the unlisted link which is shared already with you. And we'll put all our content on the learning platform which I've talked about, because we don't want others to get access of these videos. And so we have worked really hard, and you have also valued our work by being our Prime members. So we'll make sure that it doesn't get circulated. And we'll also have a few more new offering to make. And our effort is always towards enriching the value of this Mission Smile offering. So we also have a surprise which may take 3-4 months. We are also simultaneously working on a new offering. As in, again, whatever new offering will come to the existing member, it will be you will not be paying anything extra. It gets added to the existing offering, right? But probably you will find more value to it. Like abhi tak only I was presenting on one idea every month. If you are getting 2 guests and who are far more superior and more experienced than me, that gives you more value to the offering of Mission Smile. Similarly, we are working on something new, which may take around 3-4 months to build the content and then start rolling it out and sharing it with all our members. But I thought that before starting today's presentation, I should update you all. And maybe most of the people, they watch the recording rather than coming online. So maybe they will also be updated by this new development at our end. And we are we are always open to suggestion. Like Manish before the start has given a very good suggestion that probably on a quarterly basis we can have an update on the businesses which we have presented in the past. So this is the 15th webinar. So we have already covered close to 13, 15 businesses or maybe more. I don't remember right now. So that can be a challenging task to cover 18 to 20 businesses, update on that every quarter. What we can do is we can select 5 or 8 businesses every quarter and then do a update on those, right? So with this, we can start the today's presentation. I'll just let me know if the you can see the presentation slide. Is it visible? Great. Thanks, Dhruv. So before starting, again, the standard, hi, good evening, Akhilesh. Nice to see you. So before starting, the standard disclaimer, whatever we present at Mission Smile, we abstain from making any kind of recommendation of buy or sell. The idea is always to deep dive on the business, and specifically we try to cover those industries or those businesses where we see there is a good potential from a long-term perspective. We don't try to time it in the sense that this is the time to buy or this is the time to sell. Our focus is to just share with you what we'll find about this particular business at this juncture. So today's business for discussion is Craftsman Automation. Craftsman Automation is a very unique business. As we'll go on in and cover in our subsequent slides, you will get to know more about the business and also about the thinking behind the management and the promoter, Mr. S. Ravi. So these are the 3 questions we are trying to answer through this webinar. Can it be a beneficiary for auto sector revival? Are they better placed vis-a-vis their peers on the growth ahead? And how does S. Ravi stand apart from his competitors? Right. So with this, let's start the presentation. So this particular quote from this book, Sapiens, can be very well termed as the Bible or Gita for any capitalist or any investor in the long-term investing field. If you are looking at any business as an investment candidate for a long period of time, say something around at least 3 to 5 years, ideally more than that, you can't ignore one aspect of that business, and that is growth. Because if a business, however good a business is, if it is not growing, then there is some problem. So if you go to the screener and see, and if you check in terms of ROE, there would be many businesses which have ROE in excess of 20%. That doesn't mean that you go and buy all those businesses or look to invest in all those businesses. Why? Because majority of those high ROE businesses are not growing too well. So growth is a very important aspect of any business, any economy, and also I'll request everyone to be on mute. There is some noise on the background. So with this, you can see here, that is what the author Yuval Noah Harari writes in his book Sapiens. To understand modern economic history, you really need to understand just a single word. The word is growth, right? So if a business is growing, that should give us one indication that this is probably a good business. Again, not all growth are value generating. There are businesses where growth comes, but with it comes a lot of problems also in terms of your margins get diluted or your balance sheet becomes much more leveraged. Those are not the growth we are trying to focus on. Over here, our job as investors in good quality business, our job is to get into those kind of businesses where growth is consistent. In fact, growth is much above the industry level. But despite that, they've been able to maintain their balance sheet strength, right? So with this, if you look at Craftsman's performance in the last 5 years, so their sales have doubled, their operating profit has doubled, profit before tax has almost 6x. But interestingly, debt is almost at the same level. Interest cost is almost at the same level. Of course, you must say that in 2021 they did their IPO, so 150 crore came into the company's book. So that really helped them. But still, even if you take 150 crore into the, if you just remove 150 crore, even then the performance which they have achieved, specifically when the industry, auto and auto ancillary industry during that period has gone through a very tough period, right? In fact, even today, we can't say for sure that auto is out of the wood, right? Because if you look at the quarterly results of all the major auto OEMs, they have not been any great at all. But despite that, this is one company which has consistently grown, and not just grown, they also kept their balance sheet strength intact. And on top of that, they have also been managed to do a capex of 1330 crores during that period. So you are growing your sales, you are growing your profit, you are continuing to keep your debt and interest cost in check, and you are also making a huge capex. And the biggest advantage of this capex is you did this capex in the pre-inflationary era. So now to match you, your competitors will be doing more capex in an inflationary world, right? So if you look at uh, Craftsman automation in that sense, they are a little ahead of their competitors or peers, right? By being little more aggressive with the capex, way ahead in time. Look at the peer comparison. The time between FY16 and FY20, Craftsman has almost doubled their revenue. And you compare it with other companies, they have not seen that kind of a growth. Of course, Minda industry is one which has almost grown at 2x, but you know that Minda has done a lot of acquisition in that period. So that growth also takes into account a lot of inorganic growth. But when you compare the other companies, you will see and find Craftsman right at the top in terms of the growth rate. And not just that, if you compare that number in FY20 to today's number in FY22, that growth is far more phenomenal, right? Because last 2 years have been COVID-ridden, demand problem, also supply side issues in terms of the auto companies. And then also they have been able to maintain their growth path. So as I was mentioning regarding the capex in a low environment, low inflation environment, you can see from this snippet from the recent con call where they say that over the next 2 years, even if they maintain 20% growth in volumes and sales, they don't see their depreciation going up because they don't see any high capex for the next 2 years if they maintain 20% growth. Only if their growth goes beyond 20%, then they have to put in more capex, right? So that is the advantage they have. When you compare them to other auto ancillary players, they are already in running 100% capacity, and they have announced big capex plan, and all these capex plan in an era where raw material prices have already shot up. Those capex will take a longer time for payback of the original investment, right? Compared to what Craftsman has managed to do. So that is one area where they have been ahead of the industry. Again, you can see what the management say, that 200 crore is the total amount of depreciation they are looking for in the next 2 years. And similarly, they expect to reduce their uh, loan by 100 crores in the next 1 year. And they can do that because their capex requirement is not too high, even for the coming year of FY23. Right? So this is the journey of Craftsman automation. Let me just share with you how this gentleman, Mr. S. Ravi, he started out. So in 1984, he started up with this business of Craftsman. He formally formed this company in 1986. Started with a very uh, normal job of just being a vendor to automobile companies, and he was focusing more on the machining job at that point of time. And for the first 10 years of his career, so somewhere between 86 to 95, 96, he started a lot of other businesses also. He thought that those businesses will help him in getting uh, growth for Craftsman automation. But that didn't happen. Rather, what was happening was his uh, uh, his attention was getting diverted into too many things, and he realized that if he wants to make Craftsman automation uh, to something big, he has to focus solely on that. And coincidentally, in 1995-96, there were a lot of uh, Japanese, American, and English companies. They were coming to India to look for their manufacturing base in India because India offered a low cost base. They visited, just like what we discussed in case of Sansera. They visited their plants also in case of Craftsman automation, and they liked the basic hygiene stuff which they were doing. Compared to the normal player in the industry, they had much more uh, engineering finesse in what they were doing. They had far more cleaner factory outlet, and that is where they got a very good order from Mitsubishi. So they were making uh, the Mitsubishi printers. They were making parts for those printers and also box for them. That is how they started their business. And in the next 10 years, from 1995 to 2004 onwards, in that period, they saw huge growth in their turnover. So somewhere around from 2 crore or 1 crore of turnover, they uh, went to around 40, 50 crore. But there was one problem in that. Their revenue was very much concentrated on export markets. So it was around 80, more than 80% of their sales were happening in export. And at one point of time, Mitsubishi was uh, taking 50% of their sales. And so they have customer concentration risk, and they had a big risk of focusing only on export. And then suddenly what happened in 2004, Indian government withdrew some of the export benefits to these auto players, to export benefits to all the industry players. And that itself, on suddenly, it impacted their top line by 18 to 20%, because during the same time, once first the government withdrew the benefit, export benefit, and at the same time, rupee also strengthened by 10%. So that is when they realized that they also have to focus on the uh, domestic market, and then they slowly got domestic orders also, and they will, in the subsequent slides, we'll cover how they branched out to different parts of the country. But the advantage which Craftsman had was this: while most of the companies or businesses in India first focus on the domestic and then go to export, while Craftsman did just the reverse. They had the advantage of a much better process and know-how. So because they were producing for the export market, their product quality was far better. Their engineering process was much better than the other players of the industry. And that is where, when they started their expansion in the domestic market, they were very easy to uh, venture into those territories which they never did. Like when they started making the engine parts for the CV and the passenger vehicles, they didn't have uh, any experience in those products, but because of their experience in engineering and R&D, which was high class and made for the best uh, OEMs in the West, they were in a much better position than the industry. And that is what is reflecting in their strategy even today. So, if you hear the interviews of Mr. S. Ravi and if you read all the con call transcript, they keep on venturing new uh, un, uncharted territory with the confidence that even though they have not done that in the past, they have everything to learn and learn faster than the other players in the industry, and that is where they can do better. So today they are into the complete value chain, wherein the OEMs not only ask them for a product or a small part, but they also involve them in the whole product planning. So even in the designing, if they want to design something new, they will go to Craftsman. If they want to check and see if they can change some design and see how it works, then also they will come to Craftsman. That is how they have evolved over a period of last 30 years. And that is where their uh, unique uh, proposition lies, right? So this is a brief company overview, how they are positioned as on date. So they have their main headquarter at Coimbatore, but they have plants located into different places in the country, specifically more in the proximity of their customers, so that they can uh, always be available to their customer for any inspection or any, and the delivery can also be made really fast, right? So as we discussed, they started with a small unit in Coimbatore in 1986, and now they have grown and become a leader in precision manufacturing, right? And they keep on diversifying into newer areas within the auto sector and also outside the auto sector. This is what makes them de-risk their business model. And even if you look at the last 2 years, uh, when India was hit, when the world was hit by COVID, when the auto industry as a sector was not performing at all, even in that period, they have managed to grow handsomely, right? So they have done three major joint ventures. So in the past, they were with Mitsubishi. They had this uh, marketing and after sales services of CNC, EDM, and laser manufactured by Mitsubishi Japan. And today also they have this wholly owned subsidiary, which is basically in collaboration with BV in Netherlands, and also in case of you can see them working on different ways of, just a second. Yeah. So they have this two wholly owned subsidiary and joint venture. And apart from that, they continue to focus on their domestic market, which is doing phenomenally for them. So these are before we go into the three verticals, the main three business verticals they have, we can take a pause. And if anyone has any question, what we have discussed till now, we can take that up. Any questions? I'll just check the chat box if anyone has any question. Okay. Any question from anyone? No problem. So we'll continue then. Sure. So these are the three major uh, business verticals they have. So powertrain has been their major vertical since the since 1994-95 when they started focusing on, as in they started this business in machining of critical engineering part. Aluminum product is something which they have started recently because we'll cover each of these verticals separately in the subsequent slide. You'll get to know. So these two businesses, powertrain and aluminum products, these are focused on auto. And their third vertical, which is industrial and engineering, that is a non-auto business where they leverage their in-house engineering and design capabilities along with process capabilities to create two subsections. One is the storage solution and the other is high-end sub-assembly and contract manufacturing products. So this is how they are deleveraging or de-risking their business model. And they realize that auto is a cyclical industry and there can be a sustained period of say 4 to 5 years or 6 years or even sometimes 8 years when the sector goes through a lull period. That is where these sectors can help them grow their revenues and also profit. So you can see how they have uh, grown their business of aluminum products and also industrial and engineering. Okay, so you can see as of now, automotive powertrain is the bulk of the uh, produces bulk of the revenue by 52%, and then we have industrial and engineering and automotive aluminum, which cover 28% and 20% respectively. So they started with Coimbatore, then they slowly moved to they made a plant in Pitampur, Madhya Pradesh, where they got an order from Eicher Motors. Then slowly they got order from Tata Motors, and as and when they started getting more and more orders from the domestic OEMs, they started locating places which could be closer to the OEMs where they were producing, so that they can understand their system better. They could lead to a faster delivery, and also whenever there is any problem or any kind of dispute or anything, that can be resolved much faster. And that is how you can see now they have one flagship facility, 8 satellite facilities, and a very good pan-India presence in terms of their manufacturing capabilities. This is how their revenue concentration is. So they have been working hard towards their customer mix, because as I mentioned at the start, at one point of time, 50% of their revenue was coming from one customer only. And from there, they have moved to top 10 customers contributing 58%. So they have done a decent job over the last 10-15 years. However, they keep on conveying that they are trying their best to further granularize the customer profile and further reduce the concentration of uh, sales to the top 10 customers. Okay. And you can see in terms of relationship, 59% of sales are happening with customers who are with them for more than 10 years. That says a lot about the quality of product a company is producing, because there are many auto ancillary players in India, and some of the products which they make are produced by other people as well. But why these OEMs are still taking giving more and more order to Craftsman, that lies with the quality of product they maintain, and also in a way the the whole package which they provide in terms of faster delivery, good R&D, ready to take up newer projects, much better facilities. So these things help customers develop a much long-term relationship with you. Now let's go deep dive into each of these three segments. So when we look at the automotive powertrain division, so as we already covered that it covers more than 50% of their total revenue today. And when you break it down, CV forms the bulk of the revenue in this segment, which is 54%, followed by off-highways, tractors, and PV, passenger vehicle. So Craftsman Automation is a leading player in machining of critical engine and transmission components. What are the critical engine and transmission components? In case of engine components, it will be engine, crankcases, cylinder heads. And in terms of transmission parts, there are camshafts, transmission housing, differential carrier, and axle housing. So Craftsman is the number one player in middle and heavy CV market in India. See, being number one is certainly an achievement, right? Because again, you are providing a component which is provided by other players in the market, and there is not something which whatever processes or whatever way system is used to produce a, say, a engine or a crankcase, that can be easily copied by a competitor. But definitely it is the quality of the product and the finish that leads them to capture the whole market and attract more and more OEMs to give them more orders, right? They are also number 3 or 4 in the tractor segment. And what are their value propositions in this segment? They provide shorter lead times. See, the second point is more important: rapid scale up and scale down of capacity. So auto OEMs will keep on varying their quantity of orders. Sometimes they will suddenly give you more order. Sometimes they will give you less order depending upon the variation in the market demand and supply. Many smaller players or average players find it very difficult to be agile on those front. And the reason being because that is where your working capital gets blocked. Because if you hold a capacity, if you build a capacity and if you hold inventory, of course, if you don't get the orders, it will put a strain on your balance sheet, and it will put a strain on your overall working capital cycle. So not many people will be able to withstand that kind of a pain. But because of Craftsman being a company which is growing fast and maintaining its balance sheet, they can withstand the pain of the working capital elongated cycle, right? And they can manage to wait for the orders to come. They build their capacity first and give the confidence to the OEMs that you can give us order anytime you want. We have the capacity ready, right? And the third point is the ability to handle multiple models and variants. See, most of the auto OEMs in India, they work with economies of scale. They'll produce 1 or 2 or 3 things or maybe 5 things, and they'll focus on just producing more of that on scale so that their scale economics work and they get a better ROE out of it. But that is not how OEMs want. OEMs will always want you to try out new ways of doing things, to give you, they will always try something new and ask you to prepare something based on that. They will tweak a particular. So, for example, even if you look at a bike, there are always newer models of bikes which are available. In case of cars, there are newer models of car available where the OEMs try to tweak the model a little bit so that the final output provides a much better satisfaction to their end user. As an auto OEM, you have to be ready for those kind of tweaks. You can't, if you're not ready for that, you're not going to get that kind of a sustained order flow plus a better margin profile in your work. And that is where Craftsman comes in. And the kind of association they have with their customers, there are many times where their customers also say that you don't have to do this capex. We are doing this much of capex. You just help us with the design part, and we in the R&D we will be taking all the hit on our P&L. You just give us the design and give us a prototype and let us know whether this can work or not. And that is where they maintain a much better performance. So as you saw here, CV is their excuse me. So CV is their main business in the automotive powertrain. And look here, CV cycle over the years, if you track it from say 1997 to the current period, it is always very cyclical. It will go through ups and downs. And where we are standing today, it gives us a big indication that we are at the bottom of the CV cycle. And from here, we are seeing some pickup. And if that goes well, this business segment for the company, which is their bread and butter, where they get 50% of their revenue, this is already in a much better position, right? Now let's come to the automotive aluminum. So this is something which they started recently. Earlier they didn't have this division, but the reason to start this was they noticed that EV is something which is going to come, and with EV, the usage of aluminum in all the auto products is also going to go up. Why it is going to go up? Because aluminum is one of the lightest metal, and in case of EVs, because you are going to use batteries, those batteries are very heavy, and to compensate for the heaviness of the battery, you need to put something on the vehicle, be it passenger vehicle or a two-wheeler or anything. You need to compensate that extra weight of the battery with something which is lighter. That is where many auto OEMs have already started working more on the increasing the aluminum content in their vehicle. And that is why if you go and look at the price of aluminum, it has gone up a lot in the last few years. And even in the current con call, if you see, the management says clearly that whatever growth they have achieved in automotive aluminum segment, it is predominantly the price hike, as in the price rise in the aluminum product. It has nothing to do with the volumes. The volume has not grown much in the last year. It is more due to the price rise. Okay. So what they are doing in the automotive aluminum, this thing. So they first of all have the tech advantage where they are one of the few players in the country who have the capabilities across die casting technologies. So if you look at India's automotive landscape, you will see there are people who focus only on high pressure. There are people who focus only on low pressure die casting. But Craftsman is someone who is present in the entire value chain, where they also do for high pressure, low pressure, gravity, and sand. These are different ways of different capabilities which is used for the die casting thing, right? And then they also have end-to-end manufacturing. where facilities such as tool room for manufacturing tools and fixtures, die manufacturing for developing dies and machine manufacturing unit that assembles, and then special purpose machines, which significantly reduces the time to develop high quality complex casting. So they are present in the whole value chain over there, right? And what is the main offering there? What is the main positives or benefit they offer to their customer, or what is their main value proposition? They cater to diverse sectoral requirements, not focus only on two-wheelers or four-wheelers, not focus only on passenger vehicle or CVs, much shorter lead times compared to their competitors, and as we mentioned in the earlier thing, rapid scale up and scale down of capacity, right? So in case of automotive aluminum, their capacity right now is only 30% utilized. So they still have 70% unutilized capacity. Just imagine if they, in the next 2, 3 years, 4 years, if their capacity goes to 100% in this particular segment, how value accretive it will be to the margin and also the ROE. Because right now, 70% of their capacity is already lying idle. And on top of that, they have been able to grow their total business, right? See, this is how this particular slide and picture basically demonstrates in different way where aluminum can be used in the vehicles going ahead. It can be used in engine. It can be used in the battery boxes. The trim and interior can also use it. Front door, the doors. Then there are so many other things as you can see in the picture over here, which shows the importance of aluminum going forward. And that is where companies which is present there with the kind of facility they have, with the kind of uh, system where they can where they can create capacity first and wait for the orders to come in, where they have that kind of a staying power, they are always going to be a beneficiary for the uptick in the demand for passenger vehicles or commercial vehicles. Then this is a very recent article which we found on the internet where China plus one is definitely appears to be a very strong in auto ancillary businesses in India. So you can see as we just copied one portion from the article, as many as 23% of European businesses are considering moving their operation out of China, the highest proportion in a decade, according to a survey released by the European Union Chamber of Commerce in China in early May. So that is how the European businesses are looking at opportunities outside of China. And just look at this thing. Craftsman today has only 8% of their total revenue as export. What can happen if that export increases over time? In fact, in the recent con calls, the management also conveys that they have got some recent new orders from export orders from OEMs. So that is how you can imagine the kind of long-term tailwind which this sector has, and that is where a Craftsman's like company can be a big beneficiary. Now let's come to the third segment, which is the non-automotive, industrial and engineering. Over here, the main reason for doing this was to be de-risk from the auto business, which is susceptible to cycles, right? So in the engineering capability, they have developed the ability to develop any kind of tooling, special purpose machinery, conveyors, and they leverage their in-house knowledge and expertise to keep on adding newer product and projects to this division. So with a combination of in-house manufacturing and local sourcing of some components, they also provide speed and flexibility to their customers. And as in case of the previous two business segment, their main value proposition is shorter lead times, high equipment uptime, seamless customization of solutions, and a very low mean time to repair. And this is their strategy for growth going forward. Increase wallet share with existing clients and grow the client base. Second, leveraging capabilities to widen business prospects. Third, capitalizing on opportunities in the storage space. Storage space is again a subsection of their third business, which is the non-automotive, industrial, and engineering. And the fourth one is reduce cost of businesses. So if we come down to what are the major strengths of the business, or before going there, anyone has any questions till now? You want us to take that question? Or shall I continue?
Hi, Ankit, Dhruv here.
Yeah,
I
please.
suppose in the later slides you will when you discuss financial segmental wise discussions will happen.
You have any questions related to that?
Yeah, because I would because I was just going through one of the slides. If you can go back where you just give the revenue component. Yeah, this one. So where we wanted to dwell further is if you see from the powertrain, we have a revenue of 1,000 crores. I think this is the main thing where we are getting a 300 crore EBITDA.
Right.
The aluminium thing on a 440 crore, there's only a 10 crore profit. So this is where, and you mentioned about the capacity utilization. I think that will be a kicker here.
Right.
And on 612 we are getting a 75 here. So because I think there will be how the mix will work out, I think the permutation combination that way also we can figure out the future for that.
Right. So
And
good question and good observation here, Dhruv. So
yeah,
in terms of capex, the third division, which is the industrial and engineering division, they don't require capex as such. Okay.
yeah,
So
okay,
because that is more of an engineering work. So
okay,
even if their demand for these products, say even if their revenue goes from 600 to 1,000 crore, they don't need any major capex to scale up that business. So their main
got it.
capex is required in powertrain and aluminum. So in case of
Mhm.
aluminum, as we have already discussed, they have already done all the capex. So and on a consolidated basis, this is what the management says, that they can do uh, from a capacity utilization perspective, they can do 300 crore of monthly revenue in the current capacity. So you can
Okay,
extrapolate it, and so 3,600 crore of yearly revenue is possible at the current juncture.
in the aluminium space you're saying.
No, I'm talking about the total.
Total,
3,600.
okay, okay,
This is the total.
got it, got it, got it.
That is how it is.
Okay. No, because we think so. So currently their margins are somewhere, the total margins are somewhere in the range of 23%. So
Right.
if we just look, there one will be the operating leverage in the aluminum space. That will be the
Right.
big one for the future growth. Secondly is I'm just looking from screen and I don't know, but their powertrain is where their maximum EBITDA margin comes from. PBT,
Right.
right? At 24%. Industrial and engineering is pretty less at 10%. And
Right.
aluminium is currently less at 5% because probably again the operating leverage will take it higher.
Right. So
So I think
the
how the things play out, probably that will also be that is why I wanted to just check up whether you have checked out and whether this will be discussed later on, or off the offline we can take it later on post
yeah,
the session.
we can take it offline, or we can discuss now if you have more.
I
If you have
because
more.
even so, what I'll do is probably I'll just dig deeper and work out some permutations, combinations because I have not studied, so
No
I'll
problem.
take
No
some
problem.
time to that way. That is why. But I'll
No
certainly post
problem.
it on the group or on Slack, something like that. My
Yeah. You can.
observations.
you can do that. So we'll take that up
Yeah.
after that. Sure. And any other question, Dhruv, or anyone else?
Another highlighting point is this, which I, of course, I not track, but you will have to, you can't look at the entire auto space because they are mainly heavy towards the CV space.
Right.
So I think the major customers will be Tata Motors, the Ashok Leylands and Asia Motors sort of a thing.
Right.
So
Right.
their commentaries will be a lot more. And so I don't know whether it is a risk or how you would want to play it because it is just CV at the moment for them.
But they also have a passenger vehicle and a decent amount of so in their aluminum product segment, they
Hmm.
have they're they're getting a very good order from passenger vehicle segment as well, right?
Okay, okay, fair enough. Fair
So,
enough.
but CV is something where they have been in the past,
True, true.
and still CV forms a big portion of their
Big
revenue.
portion.
And
Absolutely.
plus, I believe right now they are at an advantage is because CV there is a higher chance of CV doing well than passenger vehicle or a two-wheeler. If you hear the
So,
commentary.
yeah, agreed. So I think CV will be mainly driven more by the capex and transport and everything. Both, I mean, they both are. Agree with
So
you that CV has a because CV is more B2B, passenger is
hmm,
more B2C. Agreed that way.
even even in
So,
case of
but
even in case of EV, as in electric
uh,
vehicle,
yeah,
uh,
CV has a
there-
better chance, no doubt.
right. So already CV you are seeing more volumes compared to the passenger vehicle,
True,
right?
true, true. Absolutely, absolutely. So when you
So
say
that is
CV, you include buses and everything in this, or you
yes,
just
yes,
consider trucks and
yes,
everything?
yes. Trucks and buses both.
Okay, okay, okay. Got it. And sorry, but the three wheelers will also form part somewhere. Any idea?
Three wheelers are also part, but in case of Craftsman, three wheeler is a negligible component. So that is why
Okay,
it's
okay,
not.
fair enough. Got it, got it. No problem. Yeah, that's it from
Any
my
other
side.
question from anyone? Okay, so we'll continue then. So what are the major strengths for this business? So number one is the long track record. See, uh, we are living in this world where we have seen in the last 10 years so many new age businesses coming with the help of investor funded ecosystem. And you now when the going is tough, you see how different VCs are commenting on how things will how they want more and more uh, as in they're asking their companies to be more focused on profits. They never asked them say a year ago, but today they are asking that. When you are living in that kind of an environment where inflation is continuing to be uh, probably at an elevated level, you will you will fall back more on those businesses which have actually seen those cycle multiple times in their history, and they have already weathered these storms. And not only that, they've also weathered the storm of their own sector as to how the sector also go through different cycles. And that is why you will see that this long track record of Mr. S. Ravi, he has always managed to enter new geographies and not geographies, enter new areas or new segments with always a clear mind that I can't only focus on one particular segment because that is always a biggest risk. So that is how you see the revenue mix is also getting diversified. And in the next 2 3 years, going by what the management is expressing on the con calls and also on the annual reports, their the other two segments of them will also grow much faster, and that is where their dependency on their legacy segment will go down, which is good only, right? Strategically, we know about how strategically located plants serve their customers, so that is obviously one of the strength they have. And then I think one very underappreciated strength of a business is to see when the management becomes aggressive in terms of capex. So it is easy to be aggressive today when you see that cycle is going to pick up, and when you see all the other competitors also preparing themselves for capex, and when the inflation is already so because all this thing is in place and inflation in is at an elevated level, you know that the payback will be much elongated, and your ROI will not be as good as it would have been in a non-inflationary time. But it's not easy as an entrepreneur to bet on capex during a downturn and during low inflationary times. Of course, low inflationary time give you the advantage of low cost, but you are never sure about how the inflation will play out. And in terms of downturn, when you are first year or second year in the downturn, you have no clear visibility how long this downturn is going to last. So a general typical reaction of any businessman, not just an auto player, but any business, any manufacturing business which requires uh, a constant capex, 90% of people take a back seat. They say that, okay, let's wait for market to recover. Let's see how the industry goes, and only then we'll do the uh, capex. And that is where people like S. Ravi, who have the confidence in themselves that they will be able to get demand and order even during a downturn. That is where they go aggressive when other people are not looking aggressive at all. So today everyone is aggressive and everybody will do capex, and that is when, if you listen to the recent con calls, they are saying that we are not. We have already done all the capex. We will further increase the capex only when our growth rate goes beyond 20%. So for the next 1 year or 2 year, 20% growth rate is something which doesn't require a new capex for us. That gives a very good advantage for a company like Craftsman, right? And you will see in the subsequent slide how healthy their balance sheet is, and they've been able to grow their uh, profits and revenues even during this point of time, right? And while return on equity today looks of 14% looks a little ordinary, but factor in only two things over here. Number one, uh, they are right now having a lot of underutilized capacity. If you take the holistic capacity of the company, and just just picture it when they're near their uh, 100% capacity utilization or 80 to 85% capacity utilization, what the numbers would be, how the margins will go up, and how it will impact the ROE going forward. And as an investor, you don't wait. If you like the business, and if you are certain about the kind of path the company has taken over the last few decades, you should not ideally wait for the ROE to reach 20 or 21 or 22, because most of the returns are made when that journey is going on. Once you once you reach 2022 and stabilize there, then everybody knows about you already, right? When the market has already figured that out. And probably that is why you can see some of the auto ancillary stocks, despite the downturn, have not fallen much even during this volatile period, because probably market is seeing an upcycle for autos, and these companies with strong balance sheet, with good order book, and with a diversified business in place, probably they are in for a sustained period of at least 2 3 years of margin expansion and an expansion in ROEs. And that is what will probably reflect in the market cap of these companies as well, right? But now let's also look at the risks. So this is a business which is heavily or highly capital intensive. So as we discussed in the previous slides, they've already done 1,300 crores of capex in the last 5 years, and they are still uh, their right now even their maintenance capex is around 150 to 200 crores, right? And not just that was about capex, but also when you look at the working capital cycle, as we discussed earlier, a company like Craftsman will always have probably a certain amount of unutilized capacity, a higher inventory days, where they have lots to offer to their OEMs, but probably OEMs are not taking the advantage of that at one particular time. So that will have a strain on their working capital cycle. So while ideally we all would like to have an asset light business or a business where working capital is not so stretched, but for a for some businesses like say Craftsman, their edge or competitive advantage is their working capital cycle only, because not many auto ancillary players, specifically the smaller players, will be able to have that kind of elongated working capital cycle, because that will put a strain on their balance sheet and have much higher debt on their books, right? So that is where Craftsman again has an edge, right? So because Craftsman has a diversified business model where in one particular model they have a higher inventory days, they also have some businesses where their inventory is not so tied up, right? The second point is the OEMs they cater to are all cyclical business, as Dhruv was also mentioning regarding the CV business. And of course, this is a risk. So auto has been in a down cycle for quite a few years now. In 2019, there were a talk that probably they are coming out of a slump now. But then in 2020, COVID happened. After that, again, there was a discussion that maybe auto cycle is going to revive now. But then the semiconductor concerns started coming up, and that also led to another elongated period of auto still being not out of the woods. So even though we are discussing this business and we are trying to say that these are some of the businesses which will be beneficiary of the auto upcycle, we would be very clear on one thing, that we don't have that crystal ball gaze that, okay, auto has now reached a stage where now you can immediately see an upcycle. Maybe that will happen in 2023, but we can't bet on that, right? So that is how cyclical and uncertain these kind of businesses are. Again, highly competitive. We all know how competitive the industry of auto ancillary is, and that is where a company like say a Sansera or a Craftsman, they try to focus and build their capabilities in such a way that their customers find value in their offering, right? And that is where they get better margins compared to other players. The fourth one today is inflationary. So many people look at inflationary concern only uh, as an effect on raw material, but that is taking a very myopic view of the current world we are in. Of course, inflation will immediately leads to a hike in raw material cost. That is for sure. But apart from that, inflation also hurts in two more ways. How it hurts us, specifically if we are a manufacturing B2B business. Number one is your interest rate goes up. As we all know, uh, RBI has also increased the repo rate in the last meeting. So we are right now, at least from a short-term point of view, you can expect the interest rate to be on an upward rising trend. That will also put a pressure on the balance sheet of these players, where their interest component on the existing loans can go, or whatever the new loans which they'll take, the interest component will increase, right? Second, third point is the working capital requirement in an inflationary world is, like today, is around 1.4 times, 1.5 times to what the requirement was, say, 2 years back. That is how inflation hits you. So, for an auto ancillary player like Craftsman, inflation is also a big risk, even though they say that in case of their powertrain segment, they have a complete pass-through agreement with their clients, wherein uh, the inflation neither affects them nor benefits them. The complete rise in cost is transferred to the customer. That is what they claim in their presentation and annual reports, and even if you read the con calls. In case of their second business, which is aluminium, of course, there is a big raw material impact there, and because of that only, if you see, the current quarter's margin has come down a little, because their cost has gone up, and the price revision at their customers' end will take a little time to get into effect, right? So that is about the inflationary. So three reasons why inflation can be. Don't only think from the raw material cost only. Also think about how the interest cost will change, and also how the working capital intensity will also change for a business. So any business which is into manufacturing and has high debts and has high elongated working capital, they will find it increasingly difficult to to perform on the same level of operation in inflationary time, right? So that is one risk we have to look for a business like Sansera. And the last point is valuation. So we don't see, given the kind of cyclicality auto sector has, and the kind of downturn the sector is in for so many years now, we don't see that kind of a margin of safety in their valuation today. So if we look at the normal PE, price to book, or price to sales, or even EV by EBITDA, don't see any margin of safety here. So it is around 30 times, close to 30 times P. So we are not here to recommend when to buy or when to sell. But ideally, given that we are right now in a situation where the market can see a lot of volatility, it makes sense to have a watch list of businesses like Sansera and Craftsman. And you have to first understand that whether you are sure of the auto sector revival. If you are very sure or confident of the auto sector reviving in at least the next 1 or 2 years, then only it makes sense to bet on these businesses. Because if the sector itself continues to be in trouble for a more period of time, then it makes the life of these players also very difficult. Of course, in the last 2 years, they have shown resilience, and uh, they have been able to grow their earnings, but that doesn't say anything about the future. And even in case of increased earnings, what happens if the market starts giving lower multiple to them? That is why probably this is not a not a great time to buy something like Craftsman now. If you'd have invested during the IPO or sometime at a lower level, you might continue to hold on. But uh, valuation today, according to us, offers very little margin of safety. It will only time will tell if the sector rebounds really fast in the next year. In that scenario, even today's valuation looks very attractive. So that is the dilemma you have when you are investing in a auto ancillary business today, right? So with this, we come to the end of the presentation. We'll just wrap up with one closing thought. So Warren Buffett says this: the difference between successful people and really successful people is that really successful people say no to almost everything. So this is what as Ravi did way back. Uh, so this we found in the Forbes 2013 article. So he started up many businesses like manufacturing auto components and plastic parts, pressure die casting, textile unit. But at one point of time, he realized that if I want to make Craftsman automation something really unique and big, I'll
Oh,
have to. I'll request everyone to be on mute. There is some.
थोड़ा खायला दे बस.
Thank you. So, so he realized that
संध्याकाळी कॅन्सल केली.
who is this? Can you please be on mute? I can't see right now. Just a second. I'll make sure that everybody is on mute and then we'll continue. Yeah. So he realized at one point of time that if you really want to make Craftsman automation something really big and unique, you have to leave everything else and focus only on this. If you attended or listened to our iShare webinar sometime in November maybe, so that is what Siddharth Lal also did at one point of time. He one by one he got out of 8 or 9 different businesses and focused all his energy in making RE Royal Enfield better. And you know how that transformed into, right? And that is how uh, Craftsman Automation also saw that journey in the last 20 years. So these little softer aspects about the management also tell you a lot about how the company's DNA is and what can they achieve in the years forward. So with this, we come to the end of the presentation. Thank you so much for patient hearing as always. We can now take up questions if anyone has any. Let me just check the chat box. I have not checked it. Okay. So no question. सबको समझ में आ गया सब कुछ. Great. Anyone wants to ask anything or have any comment to make?
Good evening. I'm Ganesh Kumar. I've been thanks for this seminar, conducted one. I would like to know, apart from Sansera, what are the other listed companies in this space? This is the number one question. And number two, so looking into the efforts you are taking and the meticulousness with which you are presenting, I would like to know the other offerings from your firm. So whenever you send a mail or something, also please inform us the other offerings which your firm is offering. Thank you.
So, Ganesh, after the event, if you can just send me a text message, I'll call you or maybe we can take that offline. Okay. I'll definitely discuss about our other offerings. But right now, let's focus on your first question, which is what are the other companies in this sector? So there are many. Auto ancillary business is a very uh, it's a very crowded space in you can say in one sense. So there are new players, which as in new players means newly listed players like Sansera and Craftsman. There is also Sandhar Technology, which got listed somewhere in 2017 or 18 maybe. There is SJS Enterprise. And then there are some old players like Minda Industries, uh, Motherson Sumi. Then there is, so there you can just go on screener and just look at auto and auto ancillary business. There will be many businesses. But we believe as individual investor, we should look at smaller, newer businesses more. Probably, provided that we can understand the business and we find it attractive. But why we should look at them? Because that is where, if your call is right, you get a better alpha compared to an established player. So nothing against an established player like say Motherson Sumi or a Minda Industries, but market has already seen them, and that is why the market already has probably factored in a lot of that in the valuation, right? But in case of newer companies, if you find something interesting, you should focus more on those, because that is where market is still looking or still figuring out how these businesses are. And that is where if you can get one or two companies right or one sector right, you make a good amount of money. Like just to give you an example of Minda Industries. If anybody would have looked at Minda Industry in 2013, 14, and could see the kind of work they were doing and the opportunity there. 2013 to 2020 was a 17, 18 or 19 was a fabulous time, or even if you extrapolate it to 2022, a fabulous time for a company like Minda Industries, and you would have got handsomely rewarded, right? And that is where you have to look at the next. I would not say the next Minda. No, nobody can be the next Minda or the next HDFC Bank or the next anything, but you have to find out emerging players. That is where more money gets made. I hope I could answer your question, Ganesh.
Thank you very much.
I saw Avadut raising his hand. I can't see him right now. Avadut, please go ahead.
Can you hear me?
Yeah. Please go ahead.
Thanks for the presentation, Ankit. Just to check, what's the raw material percentage in the overall raw material percentage in the overall stack
Raw
of
material is around 60%. Sorry, 50%.
50%. Oh, great. And the total capacity utilization you said for the aluminum is just 20%. Other
30%.
30%. Other verticals, any idea?
In case of powertrain, the capacity utilization is around 70% today. So that is where they say that in case of powertrain, if they grow their revenues by even 20% this year or 25% this year, they will not need any. They are not going to go for any new capacity expansion. Only if they grow more than 30%, then they will probably look at it.
Last capex, whatever which has been done, is it into this powertrain segment?
No, it was done in this one.
Aluminum. Okay. And what's the gross block?
Gross block, I don't remember right now. We can check that. It's easily available on screener. I will just. Gross block is around 1500.
And revenue you said is
2000 crore. Why so?
Oh.
2200 crore. So the gross block also has a lot of unutilized.
correct. I understood. So the major the trigger could be if the cycle reviews, they will have much more delta as compared to other players, right?
So what they are saying, I don't know how much of that is true because we still don't have such a good understanding of the operations here. But what they claim is that from the current gross block, they can do revenues of around 3600 crore. So that is the kind of opportunity they have with the current situation in place. And if they do such kind of revenue, I'm not saying 3600 ho hi jayega, but even if they say reach somewhere around 2800, 3000, that will have an operating leverage coming into play and further increase their ROE in that way.
But we expected more revenues will come from the aluminum segment, majorly, right?
So no, so growth, in terms of growth percentage, you will see much higher percentage. They have mentioned in the con call that they expect 50% growth next year in the aluminum thing. Okay. But in terms of the numbers or the absolute value, powertrain will continue to be the number one segment.
What kind of products is this aluminum business? Whether it is like large SKU one business, because you were mentioning that asset light and more variety. So is it a large SKU, small volume kind of business?
I think it is a mix of both large SKU, small volume, and also mass. Both is mixed over here.
And manufacturing process in this case, because they are into castings.
Yes.
So whole thing is, the powertrain parts are also manufactured via casting process.
Yes, yes.
No forging involved in all the cases.
Forging, I have not come across anything forging related to them right now.
Okay, and machining of the parts, as you remember, in Samsara case, they were used to develop machines internally. Whether such is the condition in Craftsman also.
Yes. Craftsman also the same thing.
So they develop the machining or the CNC, VMC, whichever is required internally, they develop it.
So they have this model of a combination of in-house manufacturing and local sourcing, which basically they are from occasion to occasion. They sometimes what happens is their customer requires at a one particular place, and they see that it is better to source it from a local player there rather than sending it across from their own plant. So that is the combination they use. In-house manufacturing is also there, plus they also do local sourcing.
No. So the point I was making is, first whatever they produce, first part will be the casting part, right? And
Yes.
then they will be doing machining on that. So to have the finishing parts of it. So whether there's machining part, whether they do it completely in-house, and those machines are also developed in-house. That's what I wanted.
The machines are also developed in-house. They have end-to-end manufacturing facility at their plants for that. Machines are yeah.
Tool room, I checked into one of the slides that they have tool room also, because whenever you are into castings, you have to have tool room. And
Right.
Whether this tool room, they are currently using it for captive purpose, or whether they are doing, because earlier they were, as I seen in the earlier parts also, they were into EDM and stuff. So they would have good EDM is actually used to produce the dies or for the casting purpose. Whether they use this tool room for just for the captive purpose, or it is merchant, because they use it for other tools, other manufacturers, just to give the produce castings and do the machining for them. Any idea on that front?
Yeah, so they have these facilities available for their customers also, and the other players also, but they use it for their captive use as well. That is how they are working as of now.
Interesting point would be to know whether they get for casting. So what is important is huge for casting. You have to manufacture dies initially, and that dies are major cost initially. And dies have life. We measure it into the part of shots, like 6,000 parts. 6,000, 10,000 depends whatever process you are following, and sometimes permanent dies are there.
Exactly.
So that cost is huge, that dies. So whether they get it upfront, those costs, that matters a lot. If they don't get it upfront, what happens? Sometimes clients or the OEMs ask them to amortize over the parts which are they are going to procure. And if volume doesn't pick up, then your payback period goes for a toss.
Right.
So That would be interesting if we get details about it, whether they get it upfront or
Right. But whatever we could gather from their description on the annual reports and con calls is that probably they are doing it upfront, most of the things. That
that
is
would
how
be
it
good.
is.
That would be good. But OEMs generally earlier they used to pay upfront. Nowadays nobody pays upfront. Earlier days, I think around 2013-14, that practice absolutely stopped suddenly, and many suppliers or tier one suppliers have suffered from it.
Right, right, right.
And it's a vicious circle because for OEM doesn't give you the upfront payment, so to your sub supplier also you don't give the upfront payment.
Right,
So
right, right,
you
right,
get
right.
you get stuck, and volume once volumes drop from the OEM, you get stuck, and because of that, your sub supplier gets stuck. The
Right.
cost they have put into for the tooling and stuff that we don't know how we are going to recover, and the whole vicious circle starts over. That's a major problem in mechanical engineering. But nobody can predict which vehicle is going to work and which is not.
Right,
But every now and then that keeps on happening.
right, 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 right. And so, in case of Craftsman, also, what we have seen is that uh, the two aspect of the working capital cycle is where the most of the pain is. As in, for them, the pain is in the inventory days. They have to keep on the inventory for a long period of time. And for their suppliers, their credit cycle also is pretty elongated.
Hmm. So
The
that's
debtor days are not too high in case of Craftsman.
okay.
It is
Working capital requirement, how much would it be on average?
around 100. Cash conversion cycle is around 100 days.
Okay, cash flow. And more, and what you're saying is inventory plus receivables is on higher side, not the payables.
Right, right. No, no, no. So data days
Okay.
are not so high.
Okay.
Inventory days are high, and also the
Payables.
payable days are high. So whatever stress you are having on the inventory side, you are passing on to your
Understood.
suppliers, right?
Understood. And one point is on the EV battery. Currently, the aluminum thing is going up because EV batteries are heavy, right? Because EV batteries are heavy. That's why the whole weight of the vehicle has gone up. And for that, people are shifting from steel or the cast iron to aluminum, right?
Right.
What if the
I think I can get your question, what you are thinking. What if the battery
battery
uh,
weight comes down?
battery weight comes down, वहाँ पे there could be some R&D and some kind of thing.
Yes,
See,
that's
anyways, having just see, first thing which is already happening is because of the weight, aluminum is coming into the body. See,
correct.
we all evolve over a period of time. Just because steel and iron was used most of the places, we were not using wood at many places. But slowly we evolved and are using now wood at many places, right? Similarly, once you start adopting, once OEMs start adopting, which is already happening, that they are taking aluminum, right? Then they will not just look at the weight quotient only. Right now, weight quotient would be the main reason why they are shifting to display. But उसके बाद उनको ये भी दिखेगा ना कि aluminum is cheaper than steel, and probably you can have much better. So अगर उसका if you look at the battery, even though the battery's weight is coming down, but you would still want to have your total weight being lesser because of aluminum. Once you replace aluminum with steel, that weight will again go up, right?
Correct, correct.
So
So
that
whether
thing,
the OEMs will, in a way, going further, will think about it, that could be a tricky point.
yeah, it's very difficult to say right now what
Yeah.
will happen. But one thing which is there that as and when we progress from one side to the other side, we generally don't go back again. That is
Hmm.
what I have seen. As in, I feel.
We go back whenever we are in the very deep situations where we have to cut the costs. Then only we
Right.
think about going back.
So cutting the cost is where, how do you see, Abdul Bhai, in terms of having steel and then having aluminum in cars, for example?
Hmm. We don't know, but right now, steel part, if capex comes, so again, it all Hindalco has also given up the capex. If capex cycle also decides the things, right? If some capex comes into steel part going further, and manufacturing kicks up in India, also the steel prices will also come down going further. We
Right,
can't,
right.
because no right up till this point nobody has announced capex into steel, and recent export tax which have been given on them. I think
Right.
capex can go much further, so steel prices possibly they can remain at higher levels as compared to aluminum, but in aluminum part also the prices have gone much higher recently.
Right. 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 Right.
And if capex there doesn't come there also, but though Hindalco has given up the huge capex,
Mhm.
there could be problem.
Right. 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 Fair point, Abdul Bhai.
Any details of the IPOs, Ankit, by IPO size, OFS, fresh issue? I think IPO came recently, right? Last year.
Yeah. Last year only 150 crore was infused in the company, and the rest of the thing was OFS. So they had City Group and also uh, one finance company. I'm forgetting the name right now. They are still the one of the promoters. I'll just check and let you know.
Okay. So they could
Not promoters. They are still one of the
hold.
investors.
Mhm.
International Finance Corporation, IFC.
Oh, I have seen. Okay.
So these two, they cashed out during the IPO.
And dilution was around.
I don't remember right now.
Okay,
I'll
okay,
check.
I will
I'll
check.
check and let you know. Mhm.
And about profile of S. Ravi, age-wise, how old would he?
He was 21 at 84, so you can see add 38 to that.
Mhm.
It would be about
So any
60.
succession planning, anything?
Succession plan is not something which was discussed recently, as in the con calls. Nobody asked anything related to that. But it appears to me that it is a professionally run company, even though he is the one who calls the shot, but they have professional CFO and other people on the board.
They have been appointed for much longer period, associated with company
Yes,
for much
yes,
longer.
yes, yes. More than 15 years.
Okay. Okay. Ankit bhai, just one suggestion. As we say, a picture says 1,000 words. If we can include images of the parts in the presentation, that would be helpful to understand, because whatever they manufacture,
Mhm.
of that, if you can include some
Uh,
images of it, that would be helpful. If you need any help for that, from my side, I can help.
No, no,
help
no.
you out.
The parts were available. It's just that we thought that probably that will be a distraction, and we should focus on the business more than the images. But now I get your point. We should have actually included the parts
Because
images.
it actually comes to know what they are manufacturing and how intricate or how simpler it is, what could be the process behind it. And we can
Right,
just.
right. No, no. Point. That's a very good suggestion, and from next webinar onwards, we'll keep in mind and put that also.
Okay. Uh, and on CV, I think CV, what we consider is, if economy picks up, then only the CV cycle is going to pick up, right? Whether it's our economy or some other economy has to pick up, then only
Right.
CV cycle, then only.
But look at it in the other way. if the economy pickups, CV will do probably far better than
Yeah.
the passenger vehicle or two-wheelers, right?
Yeah. Again, the delta thing comes into
Right. Right. And that is where this kind of companies can be at an advantage position.
Yeah. Having a unused capacity that can give us a much more advantage in this.
Right.
That's it from my side. Thank you for answering all the questions patiently, Ankit.
Thank you so much, Avdut bhai. And I don't remember the exact dilution, but I
No
just
issues.
remember, I just remember one thing, that the promoter holding in Craftsman is much better than Sansera. So Sansera, if I remember correctly, it was around 30-35%, and in case of Craftsman, it's more than 50%.
Oh, that's
Okay.
Thank you, Ankit bhai, and once again, thank you for the presentation.
Thank you so much, Avdut bhai, for being on the presentation always and asking some really good questions. That really helps us. Anything else anyone wants to ask? Great. So just before I end, just one thing which I wanted to share. So just a gist of what we have already shared at the start. So we will not be sharing the presentation link immediately, just as a practice which we used to do earlier. All the three presentations, one was Professor Sanjay Bakshi, then the one with Mr. Nandan Madiwala, and today's presentation. It will be directly be uploaded in max 8 to 10 days on our platform, available for all of you. But we are not putting any more on the YouTube for protecting the our content, so that it doesn't get leaked to outside people. Okay, I hope you understand that, and hoping to offer. We are working very hard. Our team at SmartSync Services is working very hard to provide more and more value to our Mission Smile members. And as promised at the start, in the next 3 to 4 months, you will see a new offering, which is again a subset of Mission Smile, with no extra cost to the existing Mission Smile members. So with this, we come to the end of the presentation. Thank you so much, everyone, for the patient hearing. And do pour in with your suggestions. Like today also, Manish and Avdut has given some really good suggestions. That will also help us in further improving our offering. Thank you so much, everyone. Good night and have a good weekend.